Welcome back to the channel. In today's episode, I'm going to be sharing with you another clip from our weekly Ask Us Anything mentoring session for the premium trading group. In this week's topic, we dive into lower time frame strategies. So if you are using a technical indicator-based trading strategy on a meso or a higher time frame, and you're curious about taking that strategy down to something like the 15-minute or maybe even the 5-minute time frame, then this is the video for you. I go over different strategies of porting these higher time frame strategies down to lower time frame strategies, how to properly adjust your indicator settings, tips and tricks, as well as using multiple time frames to spot confluence between signals and identify higher probability profitable trade setups. I want to thank Sasha, longtime premium member, for requesting this topic, and I hope you guys enjoy. Let's get cracking. Okay, let's get into, excuse me here. We're gonna remove all these indicators and we'll get into Sasha's question. So Sasha's question was, can we talk about a 1 hour plus 15-minute PTP strategy and your experience with it? And similar, I don't want to cut your question short. I have a lot to talk about on this. This is my area of expertise. So if I'm not able to fully satisfy, we can have a longer conversation about this as well next week. So, okay. So your question here is very simple. Can we talk about a 1 hour plus 15-minute PTP strategy and your experience with it? So the first thing I want to do is just ask you, can you expand on that a little bit and drill in for me a little bit more, like specifically what you mean or kind of where you want me to go with my answer?
Yeah, I mean, I think I've been doing some back testing, and what I noticed is basically utilizing water attar. I always feel like volatility and volume is lagging to a certain extent. For example, if I use Minx, I see sometimes that time transformation actually fires earlier. And yes, maybe the signal is not as good, but I think I see that discrepancy between like Minx, time transformation, and VADA, and just want to see if you have fine-tuned that or what your experience with that is. I think that's where I'm coming from.
Sure. Okay, good questions. So we, I don't want to say we all know, certainly Alex and I know, that time transformation will often be faster or earlier than Minx. Than anything, yeah. Right. So one thing we can do, I don't know why Minx didn't get onto the chart there. This is also, yeah, here we go. Why? There we go. Being slow, sorry. Duplicates. So there's different things. There's pros and cons, as you will see here, right? This is also highly dependent on a couple of settings. So with time transformation, it's fairly simple. I do need to update our current version of time transformation, not to change anything per se, but just to give a better user experience for the menu now that V4 and V5 is out and we can have groups and everything. So I will clean this up. But the biggest determination here for time transformation's speed is the fact that by default, it is set to 7. And this right here is the prime director of how fast or slow time transformation signal is going to be. The length here is the look back length. So we are analyzing the last 7 bars of whatever time frame you're on. If you're on the daily charts, the last 7 days. If you're on the hourly charts, the last 7 hours. For its cyclical calculation, time transformation is a Fisher transform, which is a calculus function of well, it's not a calculus function. It's what is the word? DPT or digital signal processing. It's a digital signal processing algorithm invented by John Ellis.
Basically, it just normalizes the price distribution. It takes it from like a sine wave distribution and turns it into like a bell curve distribution. It makes it easier to see tops and bottoms.
Yes. And Minx, on the other hand, is different. Minx is much more of a now and just in full preference, like we'll talk about this in a bit.
Traditional oscillator.
It's a traditional oscillator, yes. It's a traditional oscillator with some features. And one thing I do like about Minx as well is that it is a self-reflective oscillator. So it's not just like the RSI, which is like time transformation, just simply looking at a look-back length. Minx has two look-back lengths, and this is the Minx length and the static filter, right? So the Minx length is the look-back length for the initial calculation, and then it contrasts that reading with a secondary calculation over the number you have in your static filter. So I think by default, the static filter for Minx is set to 3, and I'm going to change this back, and you're going to see what a wild change that is, right? Now we do look a lot more like the time transformation with the volatility, and things are much less smooth. So this is going to depend on your time frame. If you're on the daily time frame, you do want this to be a little bit lower. But obviously, even with a setting of 21 on the daily, look at how smooth this is. Like, you don't catch all the bips and bobs, right? And sometimes tops can be a little more obfuscated, right? Whereas I think with time transformation, it does a beautiful job of identifying the bearish divergence here, and beautiful bearish divergence here and here. Whereas Minx does not do that. But you will see here that Minx is a little cleaner. And of course, we can replicate that by switching time transformation to a higher look back length as well. The problem is, particularly on the daily, once we jack time transformation up, it starts to lose a lot of its definition. Now, obviously, the signals here are still the same, and we are still getting that regular bearish divergence, but it's just not as accurate. Like, even with the regular divergence, here it's pointing it out here, and then there was a big pump instead of previously it pointed it out here. So I really do like the 7 for time transformation. I think it's very, very nice. And I really do like the 21 for Minx on the static filter, right? Like length of 10, of course you can increase this or decrease this. And the lower the time frame you go down to, the kind of the higher setting that you want to. Okay, so with that out of the way, both are very good. I use them every single day in all of my trading, and I've got multiple strategies built around each indicator. It's going to come down to a matter of preference. As you pointed out, yes, time transformation will, of course, give you an earlier signal. It also will give you great subsequent or even initial signals with divergence. Just historically, discretionarily, and algorithmically, I've had great success with divergence. I think it is a beautiful way to trade. You can build beautiful strategies just around divergence. And Minx also has divergence, but I haven't programmed in like automatic identification of said divergence, right? So like, for example, here is regular bullish divergence and a time transformation. It doesn't actually point it out, but it is there. And here with Minx, it's just a lower low. So differences. Now you had pointed out, you said something there about Sasha, about
the water, like the volume.
Yeah, the WADA will lag. I want to point out something specific about that indicator setting as well. And it's actually something that I added, I don't want to say recently, but it was the last kind of big thing that I added to WADA, and it is in there by default. And this is this use false positive filter. So what I was noticing on the daily time frame, and what a lot of us were noticing like back in 2020, is that WADA was actually too sensitive. So I put in this false positive signal so that a signal would have to be quite strong.
When you did that, you talked about that back then.
Yep. So you can disable this, and then you are going to, and you'll notice, so I'm going to turn it on, and look how smooth, like we very cleanly go from green to red, right? Without a lot of difference. And I think this is great for more macro trend analysis. And this is good for just knowing like, okay, should I be going long here in general? This might not be the entry that I want to enter at, but the trend is good, right? Whereas if we disable this, now what you're going to get is more accurate entry signals, right? Like as the movement is happening. So
on a lower time frame, you would disable it more likely. On a daily, you wouldn't, or maybe on a weekly.
I would probably actually disagree with you there. I think that on a lower time frame with much more noise, you probably want the false positive signal to filter out all the noise from the additional candles. And on the higher time frames, like the daily, you would turn it off to get that more in the moment. Again, there could be an argument for either way, but in general, the more you go down in time frame, the less sensitive you want your indicators to be. Otherwise, you're going to
it's noisy. It's noisy.
Yeah, you get flooded with noise. Yeah. Now you said something about a 1 hour plus a 15-minute strategy. So I'm going to ask you here in a second kind of what you mean by that, but I'm just going to spit some thoughts out here real quick. So with regards to running a 1 minute and a 1 hour and a 15-minute strategy, I think that's great. Obviously, I would recommend that you focus, that you make sure, I would generally recommend that you focus on the hourly strategy first and make sure that you're somewhat happy with that before begin innovating on the 15-minute strategy, because, you know, that's the worst thing that could happen. Like, you know, you're excited about this, you want to add some confluence, but then you kind of neglect the hourly strategy, which should be in a very good shape before you spin up another strategy. The other way to interpret your question is more like a multi-time frame strategy, right? And so this is what I think is really juicy. And if this wasn't what you intended, I still want to put this on your radar. So I'm going to go down to the 15-minute time frame, and in time transformation, I am going to say, I'm going to disable use current time frame, the top option here. And I'm going to say, I want to use the Fisher from the hourly. Now, what's really cool about this is that now we are looking at 15-minute bars, but our Fisher is on the hourly time frame. So we're now going to get hourly signals on the 15-minute time frame. And what's great about this is that if you're day trading or scalping, or even doing, like, you know, let's say you're using a daily one and then you're trading on the hourly or 4-hour, more positional trades, now you're seeing the lower time frame price action as you get your signal. So as you can see here, let's look at this first signal here, this first green triangle. Well, we can see here that you know, we're in this kind of lower time frame 15-minute range, and it really gives us this signal kind of at the resistance of this range, right? Yep. So this may not be the best place to enter. Like, we can get it for almost 2% cheaper if we either. So in this situation, I would either want to see more of a breakout, or I would say, okay, hey, I'm getting this signal, but now that I can see price action and more granularly, I'm going to just wait for a dip, right? And again, this is where discretion comes in. Sometimes you'll wait for a dip and then price just runs off without you. That's always going to happen. But more often than not, I think you're going to find yourself with a strategy like this actually getting a better entry than you would have by just market buying, you know, upon the moment of the signal. This is, I would say, a little bit more advanced, because I think initially I do, of course, recommend that people just focus on kind of blindly trading their strategy in general, with the caveat that I was pointing out to Stephen about capital management and not trading once we've lost a percentage of our account. That's baked in. But once you're happy with your strategy and you're getting good results, and you're looking to do better, like to improve on that 1% that you could get better. This is how elite performers improve. This is the way, I think, is by trying to get more optimum entries on your trades. And this is probably going to open up new avenues of experimentation and strategy creation that I hadn't thought of. Okay, that's enough ranting. Sasha, am I going in the right direction?
Yeah, no, I mean, that's actually great, because I mean, what I'm doing is the 4-hour with the 1 hour, and then I went, of course, down to the 15. But what you're showing me is kind of answering my question, because the same applies to the 4-hour. I get that signal, but somehow then I have to find the entry on the 1 hour, and that sometimes makes it difficult. And I've been stopped out many times when it was actually a great trade and a great signal, but I just did not find the perfect entry. And so what you're showing me here, I was not aware of, is actually kind of answering that, because if I can run the time transformation on the 4-hour and then the chart on the 1 hour, then you just see it just completely looks different. And you, as you said, you need some discretion, but I think the patterns are pretty similar. You know, the patterns, you recognize those patterns. Yep. That's why I think that's what my question originally came from, when I want you to share something. Despite, I still feel that the time transformation is a really good indicator, right? I mean, it feels like just that indicator alone is very powerful.
Mm-hmm. It is a good one. I will not deny that. I wanted to point out just one other kind of layer of complexity here. So just adding on from what we were just discussing about using the time transformation to analyze the higher time frame indicator wise, and then looking at price action on lower time frames, we can then add a second time transformation on the lower time frame, right? So now we've got the hourly time transformation and the 15-minute time transformation. And this, I don't think these are really good examples here, but we probably have to tweak our time transformation here a little bit. Like maybe because we're on a lower time frame, we probably want this to be a little less sensitive. So let's do something like 21 maybe. This might be good. Yeah, it's not super. That didn't really improve it. But again, we're just looking at kind of this specific example. Though there is a buy signal here, but that's before the hourly buy signal here, and this is bearish divergence. So let's just go back to 7. But the idea here again, after some tweaking, is that okay, once we get the signal, then on the lower time frames, we don't have to just rely on price action. We can also just look at our indicators on the lower time frame, right? And like here we get regular bullish divergence. And this is the entry trigger that we were waiting at. This is a much better price than up here, right? So, and again, if you didn't, although if you got a long signal here and then you saw this big red candle, generally you're like, okay, I'm gonna buy here. You know what I mean? It's just, experience and discretion. You'll build your experience with this. You're going to come up with your own custom strategy. And these are all very fascinating and fun ideas that I've used and have used over the years to come up with really cool systems. It's been a lot of fun.
Yeah, thanks. I think it helps me to just have another level of testing and playing around with it, figuring things out.
And again, just some general advice here too. Like I know you've been very serious recently about working on the strategy, just grinding it out, and that's exactly the way to do it. And I think you're doing great. Every time the questions that you're asking, like the progress that I'm seeing is fantastic. And I just want to remind you that this is just kind of a general rule of life. Always try to, as traders, we kind of want we want a system that's like, right, 80% of the time, all this stuff, right? Like makes us millions of dollars. Slow, continuous growth over time is the strategy for success. Yes, crypto traders will become billionaires, millionaires overnight, or, you hear all these stories, right? But as I said in my recent video last week on YouTube, 5 secrets of cryptocurrency trading revealed, for every success story like that, where dude, bought Pepe randomly, like drunk one night and then woke up the next morning a millionaire, for every one person like that, there's 10,000 people who lost their entire money, all their money on that coin. So, don't focus on that. Focus on the slow, continual gains. And, you're quickly developing a strategy that I think is going to be long-term profitable for you. And just try to, what's the word I'm looking for? I don't want you to settle or be satisfied with that. Just, be happy with what you've got. And if in your trading, you find that maybe this style works for you, or this indicator works for you, or this strategy works for you, or this complication works for you, then go that way. If it feels right to you, and if it's working, don't handcuff yourself to what I say or what anybody says, right? Like do what works for you and do what makes sense for you, because that is how you're ultimately going to have a system where, you just feel bulletproof with it. It's a great feeling.
Yeah, that's saying thanks for sharing that. That's definitely helpful. I guess you have to make it your own. I think that's what you're saying. Despite what you showed us, still testing it and making it your own with whatever little tweaks, I think just makes it more powerful. That's what my experience is,
Yep.
Well, what makes it more powerful is that when you create it yourself, you believe in it more because you did all the work to make it. It's a lot harder to follow a strategy that someone else has made, even if it's like, oh, look at these, years of historical data. It's like, yeah, but I don't know exactly how it works. It's just so hard to trust it 100%. Like you need to sit underwater on a position and be like, yeah, but that's how the system works.
Yeah.
You get 5 wrong in a row. Hey, that can happen. I know how the system works. When you don't know how the system works, it's a nightmare.
Right. Because what is this losing strategy you got me hooked on? We just had 5 live losers in a row, right? Yeah, exactly. So just difference in perspective there. And that difference is powerful. Yeah, and I don't want to undercut PTP. What I believe I've come up with is a time-tested, empirical, scientific process to go through the steps of building a strategy, to cut out all the guessing and well, how do I build a strategy? What statistics should I be focused on? What's important? What's not important? I've put together, I've spent years of my life constructing that roadmap, but at the end of the day, you've got to take that and put your own personal spin on it. You don't have to, but
yeah, we can teach you a certain strategy, but it'll stop working eventually. You got to learn how to build your own strategy, and that way you can move along, and then that's what we do.
Yeah, no, I agree, and thanks, guys. That's really very helpful.
And then we make you an analyst.
Yeah, it'll take some time.
Thank you so much for watching all the way to the end. If you would like your questions featured in our Ask Us Anything segment, all you need to do is join the premium trading group, link down in the description. Get access to all of our signals, alpha, market updates, reports, coursework, and much, much more. I hope to see you guys in the group, and let me know down in the comments what you think about lower time frame trading. Cheers.